Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, daily chart. And we had seen this great difficulty in taking out the 9-day. We got through jobs on Wednesday. In the overnight Globex, they ran it up as high as 34. Yeah, 34.5. Touched the upper band on the daily chart, and then the bears finally said enough is enough. They were able to get a rejection together to produce a couple of lower highs, comes up, test 25 like midday, and then the bottom falls out. They finally get down and engage the 9-day. They finally get down. Let me go to the hourly chart. So 34.5, they open the market, couple lower highs, and finally you get the rejection. The 25 area held really nicely midday, and then you got that big move down in the afternoon that took out the pre-FOMC price at 82.5. The 9-day and the weekly pivot. The nice part for us is that pre-FOMC price tends to get retested from wherever price goes within, the first day or so. So as it starts to break down up here, we're looking at a few things. But one of the things we're definitely looking at is that it is absolutely capable of coming down and touching that 82.5 area. So that let us get into a nice little decent trade from up above. Nowhere, not above 30, because we don't throw darts at highs. But the high 20s area didn't get stopped out on this, so that was nice. What we've seen in the overnight is an inability to convert weekly pivot and taking it back to the 9-day and the pre-FOMC price, which are sitting right on top of each other, 82.5, 83. So 82.5, 83 is the most important number on the board right now. Where do we close today relative to that number is going to set up next week. The weekly pivot is certainly going to get a lift here with this kind of a high. Depending on what happens today, unless you get some kind of a outlier situation, it's probably going to, it'll lift it up right to the general area. I haven't done the numbers yet. But for today, 83, and where we close relative to 83 is going to be very important. For the bears, if you really want to have the conversation, it doesn't have to be today, but it needs to be early next week. We touch the upper band and we reject. Where's the next place we go? Anybody that's watched this webcast for any period of time, certainly anybody that's watched it for the last 10, 11 years that we've been doing it, knows that the S&P 500, the futures, the mini, the cash, all of it, likes to trade between the Bollinger Bands. Upper band, middle band, lower band, middle band, upper band, etc., etc. When it gets jammed between the upper band and the middle band, it's a dip buy market, which is what we've been in. When it gets stuck between the middle band and the lower band, it's a rally sell market, which we saw last year, certainly in 2020. The rejection yesterday was a very nice, clean touch on the daily chart of the upper band. Middle band is next. That's 45.31, 45.32, and that's going to continue to rise with price. It needs a test. The bears want that test to be a function of price, not a function of time. What do I mean by that? It's a moving average. Eventually, it's going to come in, and it's going to get tested as a function of time as it lifts these lower prices. That is bullish. Testing a moving average before it's time, meaning as a function of price, because price is just like, nope, we're coming back in to test, that can be bearish if the bears can execute when they get there. If they're out of gas, well, then that turns into a dip buy too. If they can press through and convert, then it opens up some areas to the downside. So I'm not saying it has to be today. I am saying that it needs to be early next week. It needs to go test the green line. This needs to be a very efficient move to the daily mid band. If it's not, then we end up in this continual battle over the 9-day. And what you can see from the 9-day is the bears continue to lose those battles. So we're at a very important couple of sessions here that's going to set up the rest of the summer into the early fall. Volume weighted average price 45.76, hourly mid band 79.5. Proprietary moving average is 81. We already talked about the 82, 83 area being pre-FOMC in the 9-day. That's the biggie. And, we'll see what they do with it. All right. Everybody have a fantastic day. Have a fantastic weekend. Be safe. Be healthy. Take care. Trade them well. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.